If you are a senior, there is one Social Security document you should not ignore. It may not look exciting, it may not look urgent, but if something is wrong on this document, your Social Security check estimate could be lower than it should be. And the scary part is this: many people never check it until they are ready to claim benefits. By then, they may be shocked to find missing earnings, wrong income years, old work records that do not match, or benefit estimates that are not what they expected. This video is not about a secret form that magically increases your check, and it is not a promise that everyone can get more money. This is about one official Social Security record that can affect how your future benefit is estimated. That document is your Social Security statement, and today I am going to show you what to check on it, why it matters, and what mistake could quietly lower your Social Security check if you do nothing. Stay with me, because number 4 is the one many people skip, and it can affect both your monthly estimate and your retirement planning. First, what is the Social Security statement? Your Social Security statement is an official record connected to your Social Security number. It shows your estimated retirement benefits. It shows possible disability and survivor benefit information. And most importantly for this video, it shows your earnings history. That earnings history matters because Social Security retirement benefits are not based on one random year. They are based on your work record over time. For many people, Social Security looks at your highest 35 years of earnings when estimating retirement benefits. That means your earnings record is not just a history page. It is part of the foundation behind your future check. So if a year is missing, wrong, too low, or not reported correctly, that mistake may affect your estimate. That does not mean every error changes your final check, but it does mean you should not ignore your record. The first thing to check is whether every year you worked is listed. Open your Social Security statement and look at the earnings history section. Do not only look at the estimated monthly benefit. Most people jump straight to the big number. They want to know, how much will I get at 62, full retirement age, or 70? But before you trust that number, look underneath it. Check your earnings year by year. Ask yourself, did I work that year? Did I have wages? Was I self-employed? Did I change jobs? Did I move states? Did I work part-time and full-time in the same year? If you know you worked in a year but the earnings shown are 0 or much lower than expected, that is a red flag. It may be correct, but it may also be worth checking. The second thing to check is whether your highest earning years are showing correctly. This is important because not all work years affect your benefit equally. A low-income year may not matter much if you already have 35 stronger years. But if one of your best years is missing or reported too low, that can be a bigger problem. For example, imagine someone worked overtime for several years near the end of their career. Those higher earning years could help replace lower earning years from earlier in life. But if those high years are missing or wrong, their estimated benefit may not reflect the work they actually did. This is why seniors should not only check whether a year exists. They should check whether the amount looks reasonable. You do not need to be perfect down to every dollar. But you should notice obvious problems. A year where you earned around $45,000 should not show as $4,500. A year where you had steady employment should not suddenly show 0. A self-employment year should not disappear if you paid Social Security taxes properly. The third thing to check is whether you have enough work credits. This is different from the benefit amount. Work credits help determine eligibility. For Social Security retirement benefits, workers generally need 40 credits. That usually means about 10 years of work, because a worker can earn up to 4 credits per year. But credits alone do not decide how large your monthly check will be. Credits help determine whether you qualify. Your earnings history helps determine how much your benefit may be. That difference matters. Some people think, I have enough credits, so my check should be fine. Not always. You may have enough credits to qualify, but your benefit amount can still be affected by low earnings years, missing years, or fewer than 35 years of earnings. That brings us to the fourth mistake. This is the one many people skip. Check for 0 years. A 0 year means Social Security may not have earnings listed for that year. Sometimes that is completely normal. Maybe you did not work. Maybe you stayed home to raise children. Maybe you were unemployed. Maybe you were in school. Maybe you were not working in covered employment. But sometimes a 0 year can be a problem. If you worked and paid Social Security taxes, but your statement shows 0 earnings for that year, you need to find out why. This matters because if you have fewer than 35 years of earnings, Social Security may use zeros in the calculation. Zeros can pull down the average, and a lower average can mean a lower estimated retirement benefit. This is why one missing year may matter more than people think. It is not just a blank line. It could be part of the calculation. The fifth thing to check is self-employment income. If you were self-employed, owned a small business, did contract work, drove for income, did freelance work, or filed Schedule C income, pay close attention. Self-employed workers pay Social Security taxes differently than regular employees. If taxes were not filed correctly, or income was not reported properly, your earnings record may not show what you expected. This is especially important for seniors who spent years working for themselves. Do not assume every self-employment year was recorded correctly. Check the statement. Compare it with old tax records if you have them. And if something looks wrong, gather documentation before contacting Social Security. The sixth thing to check is name changes and identity issues. This matters for people who changed their name after marriage, divorce, immigration paperwork, or legal correction. If your name and Social Security number did not match correctly with employer records, wages may have been delayed, mismatched, or reported incorrectly. This does not mean you should panic, but it does mean your statement is worth reviewing. If you see missing earnings around the time of a name change or major life change, that may be a clue. The seventh thing to check is your claiming age estimate. Your statement usually shows estimated benefits at different claiming ages. This is where many seniors misunderstand the numbers. The age you claim can change the monthly amount. Claiming early can reduce your monthly benefit. Waiting until full retirement age can give you your full retirement benefit. And delaying after full retirement age can increase the benefit up to age 70. But here is the important part. That increase does not come from a magic document. It comes from timing rules. So if someone tells you, this document will increase your check by 40%, be careful. The document does not increase the check by itself. The document helps you see your record, your estimates, and possible mistakes. The real power is using the statement to make better decisions before you claim. Now here is what you should do. Step 1. Create or sign in to your official My Social Security account. Use only the official Social Security website. Do not click random emails, text messages, or ads that say they can increase your check. Step 2. Open your Social Security statement. Look at the estimated benefit amounts, but do not stop there. Step 3. Go to your earnings history. Check every year. Look for 0 years. Look for missing years. Look for earnings that look much lower than what you remember. Step 4. Compare your statement with old W-2s, tax returns, pay records, or self-employment records if you still have them. Do not guess if the difference is serious. Use records. Step 5. If you find a possible error, contact Social Security and ask how to report or correct the earnings record. Do not wait until the month you want to claim benefits. Give yourself time. These corrections can require documents and review. And here is one more warning. Do not give your Social Security number, bank information, Medicare number, or login code to anyone who calls you and says they can fix your check. Scammers know seniors are worried about Social Security. They use words like increase, bonus, hidden check, and urgent document to make people panic. Use official sources only. Now let's bring this together. Your Social Security statement matters because it shows your benefit estimates and your earnings history. Your earnings history matters because your future retirement benefit is connected to your work record. A missing year, wrong amount, self-employment mistake, name mismatch, or 0 year may affect what your estimate shows. Not every mistake will change your check, and not every senior will find an error. But every senior should check, because if your record is wrong, ignoring it will not fix it. So before you claim Social Security, before you rely on the estimate, and before you assume your check is correct, review your statement carefully. Check the earnings, check the zeros, check the highest years, check the name history, check the claiming age estimates. That one document may not magically raise your benefit, but it can help you catch a mistake before that mistake follows you into retirement. If this helped you, subscribe for more clear updates for seniors, Social Security, Medicare, and retirement money. And comment below. Have you checked your Social Security statement this year? Also comment statement if you want a simple checklist of what to review on this document. Share this with a parent, spouse, neighbor, or friend who is close to claiming Social Security.